Good afternoon, everybody, and welcome to this individual executive member decision. My name is Callum Wernham. I'm a Democratic and Electoral Services Officer. With me today making the decision is Councillor John Kaiser, who is the executive member for Finance and Housing. From the officer side of things, we have Andrew Cooper-Zavarich, who is a senior specialist for income payments and recovery. And also in attendance today, we have two other councillors attending the meeting. That is Maria G and Imogen Shepherd-Debay. So with that, I will hand straight over to Andrew, who will go through the report for us. So Andrew, over to you.
Yes, good afternoon, everybody, and thank you for that, Callum. Canute UK Limited held a lease on Unit 12, Ashfield Way, Woking, Berkshire, from the period the 1st of May 2017 to the 11th of May 2018. The report I'm going to give a summary of relates to business rates that I'm requesting to be written off in line with the Constitution. The business rates billing setting out the instalments payable for Canute for the 17-18 and 18-19 financial years were issued correctly on the 14th of June 2018. As no payments had been received, instalment reminder notices were then sent on the 30th of July 2018, as I say, as no payments had been received. We constantly chased up the company to make some payments through various phone calls, instalments, and using external tracing agencies to no avail. The business rate account was then closed effective on the 11th of May 2018, as the council was informed by an insolvency practitioner that the company went into administration on that date, and the assets had been sold via a pre-pack administration to a new company that took over the lease on the 12th of May 2018. The total debt that we're looking to write off is £97,321.98, covering those financial years. There is no redress that we can get this money back whatsoever. We have registered our interest with the administration and the insolvency practitioner should there be assets in the company. Therefore, I'm asking if the debt could be written off. Thank you.
Okay, thank you, Andrew. Just a number of questions. This company obviously has no assets. Is that correct?
As far as we're aware, that's correct.
Are the people? Did the people who did the pre-pack? Did they take over the premises and are they paying the rates?
Yes, they have. They took over as a new lease on the property from the 12th of May 2018.
Okay, so this company went down with what, about £5 million worth of debts, according to this. I think they're part of a larger organisation which was called Canute Group, based out of Essex, and it meant, unfortunately, there was 600 people lost their jobs. So I don't know whether the pre-pack saved a number of those jobs. I expect it probably would have, or they wouldn't have allowed a pre-pack. I know that there are some questions. So if either Imogen or Maria doesn't ask the questions, I'd like to come back. So Maria, if you'd like to ask your questions.
Yeah, I just have one question really, which explores two different ways of providing for bad debts. So in the report, it said that there was no direct revenue effect because the bad debt provision would be used to set off this debt against. So I understand that. But was this debt specifically provided for? So therefore, the revenue hit was taken maybe a year ago. Or is there a general provision, in which case reducing the provision by writing this debt off will have an indirect revenue effect? So probably a question for Andrew, who...
Yes, are you happy for me to answer that, John?
Yes, by all means, Andrew.
Yeah, what the council does is at the end of at the sort of start of every year, sort of at the end of every previous year, within the sort of midterm financial strategies, the council put to one side a bad debt provision. And that could be a certain amount. It could be 1%, 2%, whatever it may be. So they just give us a sort of a figure of 1%. So let's say, for instance, that's £200,000-300,000. That just reduces the bad debt provision against any other debts that we may write off within that year, whether it's through the Constitution, the financial regulations, or through the IMD.
OK, that's great. So given that this debt will use up some of that provision, although it doesn't have a direct effect because it's taken against the provision, it will require an amount equal to the debt being written off to be added into the bad debt provision, compared with if this debt hadn't been written off. That would be correct, wouldn't it?
I think if I understand you correctly, Maria, that's correct, yes.
Yeah, so if you had 1 million and as a bad debt provision, you wanted 1 million next year as well, the fact that you're writing off sort of 90,000 means that you're going to have a direct, indirect effect of the debt rather than a direct one.
Yes, correct.
Okay, that's great. That's all. I just wanted to know how it works. Thank you very much.
No, that's fine.
Can I just expand on that a little bit? If you don't spend a whole year's provision, does that provision sit there or is it released the following year?
No, it's just, say it's 1%, John, every year.
Right.
So if we don't spend up to that amount, it then
Yes.
just gets transposed over as a million pound next year. It's worked into the council's books.
Okay, so we're not necessarily looking at 1 year's provision to pay off of this. We could have 4 or 5 years where we'd underspent that provision.
Correct.
Yes.
Yes.
Okay. That's
Right.
important.
It's except that the provision is at a certain level, isn't it? So it's like a credit in the books. And if you take £90,000 against it,
Yeah.
then compared to if you didn't take the £90,000, it has to be built back up by that one. So although there isn't a direct effect of this write-off, there is an indirect effect in that you'll have to replenish the bad debt provision back up to its 1%.
Yes, but yeah, okay, yeah. But what I'm trying to establish is if we haven't spent the previous year's 1%, does that mean that 1% would whatever was left there would roll over?
No.
It doesn't. Okay,
No.
That's what I'm trying to. And the other there's only a bit of good news in this is the fact that the government's got to pick up
Yes.
51% of it, doesn't it?
Correct. Yes.
So the actual write-off for us is £47,687.
Correct. Yes.
77. Okay. Is there any more questions from anybody?
I could ask. I kind of would like to know more about as soon as this company started getting into trouble and not paying its debt. I'm wondering what sort of steps the council took to pursue its outstanding debt. What steps did they go through to say, okay, you haven't paid? What things were offered to them, and
Yes.
a bit more about that background? Is that something you can tell us, Andrew?
Yes, I could. No problem at all, Imogen. I mean, if I can look at it on a generalization as well, because we do this for all businesses, not just this particular business. If we notice that a business is in financial trouble, and that's indicated through not paying their bills, not answering our phone calls, or whatever it may be, there's a whole host of things, or not responding to enforcement agents, for instance. There's something called a Section 47, which is a hardship payment that can be offered to the businesses. And we offer those up at the sort of beginning when we notice that they're in sort of financial problems. Whether they take us up on that is up to them to decide. They have to provide the accounts that show us that they are meeting financial problems. I don't think in this case they took us up on that offer. But what we do is send out reminders. We will follow that with a phone call to try and understand what the issues are. Now, I think sometimes the problem is trying to get through to the right key stakeholder when we contact these businesses, because there are, like most places, a big business, you're trying to get through to the accounts of the right person. But we can only target the address that we're given. So if we can, we'll try and make contact with them. We will try and visit them if we can. If we get nowhere down that route, we'll constantly write to them, email them. But at the end of the day, if they don't respond, we'll then send in enforcement agents. They have their methods of communicating as well. So we will offer up any financial support that we can before we go down the route of enforcement agents. Because to me, if we go down that route, we've sort of failed. We need to understand the problem before we get to that end result, if you know what I mean. And that's how we try and do it with all businesses. Some businesses will respond, some businesses don't. And it's separating out the can't payers, won't payers, those in financial trouble and those who aren't in financial trouble. So there's a whole host of things we do before we go down this route. But until we knew about it, it was probably too late in the day. They were already in financial problems.
Yeah, my experience of pre-packs is they're kept very quiet because the people want to move very, very quickly.
Yes.
It's normally 5 days is the period that they want to keep it quiet, because if you're phoenixing out a business to the management, for instance, the last thing you want is your suppliers to withdraw supply, because in essence you have no business. So they keep these things very close to their chest. You can argue whether it's good. The way it was always justified to me pre-pack is if we can save 300 jobs, okay, and the company comes back and then can continue to start to pay its bill. That's why these things are designed. They're not designed to allow people just to run away from their debts. They're designed to keep the business going. I've done a couple, quite big ones, and we ended up keeping the majority of the staff, which is really the objective.
How many staff were at this location?
Well, there's 600 staff in this whole company that were made, or they were put on.
The whole company, or just Wokingham?
No, the whole company. They were put on notice. They're a company. They are part of something called Canute Group. I've done a little bit of research, and in the May they went bang, and 600 people were given redundancy notices. But I don't know how many of those.
We don't know how many were here. Okay, that's fine.
But
it looks like it's unsalvageable anyway. So yes.
But there is somebody in there now who are trading as that pre-packed company, and they're paying their rates. So.
Right.
Okay.
All right.
Yeah.
I expect they were a transport company. They had lots of big lorries. I expect the people who really got knocked were the people who own the leases on the lorries.
Yes.
So.
Well, if they've got drivers, the drivers probably quickly pick up work elsewhere, I guess.
Yeah, they would have done. I expect you ring the leasing company and say, come and pick up your £4 million worth of lorries.
Are there any further questions from members?
I'm happy to approve that. I don't think there's anything else we can do under these circumstances. Okay,
in which case I will move to the recommendation. For anyone watching, that is as set out on agenda page 5. And I'm just going to read it out, and then John, if you're happy with it as it is, then just let me know, please. So the recommendation is that the executive member for Finance and Housing agrees to write off as unrecoverable the outstanding business rates debt of £97,321.98 as detailed within this report. John, can you confirm you're happy with that, please?
Yes, I'm happy with that. Well, I'm not happy.
Well, but content.
Content.
Well, thank you very much, John, and thank you everyone who's watched and who's attended the meeting as well. This decision will be made, will come into force subject to the standard 5-day call-in period, at the end of which, should the item not have been called in, then the recommendation will become a live decision. Thank you very much, and I will, at which point, close the meeting.
Thank you very much. Bye-bye, everyone.
Thank you. Bye-bye.